Bring in Barton Crockett, senior internet media analyst at Rosenblatt Securities. He's sticking with a neutral rating on the stock ahead of its results. Barton, it's always great to see you. You're a bit more cautious going into this report, but you're not alone. I read the reports from Deutsche Bank, Goldman, among others. Your price target, 554, which is below where the stock is trading. Tell us why. Tell us the number one reason you're a little bit more cautious.
Well, I think Netflix's stock has a strong history of really moving in tandem with subscriber growth. And they've had a tremendous lift in 2023 from the paid sharing crackdown. They added nearly 30 million subscribers in 2023. And that was on, 100 million people globally, 30 million in the US being impacted by paid sharing. Many of them, I think, have already signed up if they were going to. And so I think the impact of that fades. And I think you're probably looking at a 2024 where there's much less subscriber growth than there was last year. And history would tell us that that's a tough setup for Netflix's stock. And so that's number one. And, I think we'll start to get a sense of that here with the March quarter earnings. But really, the story will be told in the June, September, December quarter when the paid sharing comps really kick in.
Is it competition and also just trying to figure out their ad tier strategy, or could we put some of the challenges at the macro level, whether it's higher interest rates, consumers now being a bit more selective about where they're putting money to work and what they want to buy?
Look, I'd say it more charitably. I think that they've just had so much success that it's going to be hard to sustain that. And I think the stock's run, with the performance that you see here, tells you that the market's expecting this to be sustained. And I'd like to see that be digested. I think there's a ton to be, to admire at Netflix. I think they're really killing it in terms of dominating subscription video on demand. Their ad rollout, I think, is a slow burn, but one that ultimately, is having success. But trees don't grow to the sun here, to use the cliche. 30 million subs, retreating from that, I think, is, something you want to let the market digest before you plow into the shares right here.
Steve, size up the competition. Is it really a threat?
Well, we're seeing some interesting stuff with the competitors. We know the problems that Paramount is going through right now, so let's just kind of put that aside. Look at what Warner Brothers Discovery is doing. Look at what our parent company, Peacock, is doing. Look what Disney's doing. First of all, Disney's copying the password cracking, cracking down on password sharing, just like Netflix did after all that success. Second of all, we're seeing those companies, Warner Brothers Discovery, NBC Universal, start licensing more content back to Netflix. Netflix is, if you go on Netflix now, you'll see a lot of content from HBO, for example. That used to be unheard of not too long ago. So Netflix has kind of turned back into this hub of where everyone knows that's where all their eyeballs are. And so instead of doing original content, we're also seeing them spend on these more reruns and so forth from traditional media companies as well. So the competition is starting to rely on Netflix because, look, Peacock losing money, Disney Plus still losing money. All these are money losers, and they need to make up that revenue somehow.
They're the best name so far in terms of how the company's been able to gain market share. But Barton, you also say that Netflix could be a sleepy beneficiary of AI. Explain what you mean by that.
Sure. If you're looking for a new story in Netflix, beyond paid sharing, I wonder about this one, which is, we're hearing a lot of talk about tools like Sora, OpenAI. Tyler Perry was kind of build an $800 million soundstage that he pulled back on because with this type of generative tool, he's not sure you need to have studios anymore. That sounds like that could be a big cost saver. And it sounds like if anyone's really kind of benefit from that, it could be Netflix. So, what I'm interested in hearing them talk about on the call is that. Is there, over time, a real kind of cost reset that they could lean into, perhaps more than anyone, from using generative AI to do a lot of the production work for content?